The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. This is September the 25th, Wednesday. Let me just put this little sign up here quickly just to show you what's happening today. At 7 o'clock, Cambridge, Massachusetts, over at MIT, Massachusetts Institute of Technology, in room E51-325, third floor of the MIT Sloan Building, corner of Wadsworth and Amherst Street off Memorial Drive. It's actually 70 Memorial Drive, the building. I'll be the guest speaker. It's the 10th anniversary. It is the birthday of it was originally the Investors Business Daily Meetup Group. Then it became the Boston Investors Group. Well, both groups are going to be meeting as a celebration tonight. And I am the privileged guest speaker, 7 o'clock to 8 o'clock celebration with both groups and guests. And there'll be food, sandwiches, some people bring special dishes, others snacks, others desserts, or soft drinks, or whatever. So if you want to come, you're welcome to come. I'm sure if you go to the front page of if you search Google for Boston Investors Group, there'll be maybe a sign in just so that they know how many people are to be expected. But at the same time, they do take guests, and everyone's welcome. And I've spoken there many times. It's just a great pleasure and a privilege because the questions that are asked are always just fascinating because we have a mix of technical analysts and fundamental analysts, and they are looking at many different things with many different perspectives, and we try to get to that. And it's not a complacent group. Nobody just sits there saying yes, yes, yes. People ask questions. They question away. They want to know the verification, etc. So it's really a lot of fun, a lot of integrity, and a lot of good treats. So I'll be on at 8 o'clock. 7 o'clock to 8 is a bit of a party there. And then 8 o'clock until who knows when, I'll give a presentation and I'll take questions. The questions are always really interesting. So that's here in the Cambridge, in the Massachusetts area, Cambridge. Looking forward to seeing you. And let's see, I think that's about it. I think I can get rid of that right there. Okay, that's all. Thanks, Steve, for 2 great hours. Just there's so much information and there's so many things going on, and we're kind of cusping. We're cusping in many areas, and I'll talk about that in a moment. But I just want to quickly add, don't forget Steve's workshop coming up, his Master Trader Series. We call it a Master Trader Series. Really what it is a mastering trading series. It's not to be a master of trading. Is to be able to master your particular abilities, and what is given to you is valuable, really valuable information and research that has been done, and the experience that goes with it. So please consider going to this particular webinar on Friday. We all love giving these things. I know I always enjoy it. I'm looking forward to one that I hopefully will give maybe in the next month or so. But these are just, it's a fabulous time because I've always believed that when you teach, you'll learn it twice. You actually, never have I given any of these courses where I haven't come out and said, wow, wait a minute, that's really interesting. I mean, one in particular, I remember that for years I looked at the market, I looked at charts, I'd done all these mirror image charts. Look at this. Here's a mirror image chart. That's the Dow, the DIA and the DOG. That's the ProShares Trust Short Dow. 100% short, and this is 100% long. And look at the symmetry, look at the mirror image. And then someone said to me that, having checked out the Chapman Way for quite some time and then taken the course, they said, why is it that you don't look at the downside and just be as strict as you are on the upside with the troughs and the peaks and the naming of the letters? And I'll never forget it. It struck me like, wait a minute. And that's when I came up, not with the, because there is actually a difference, but I'll show you something right now. If you're looking at this particular chart that I'm showing of the diamonds, look at the symmetry of going up from right there, you don't even have to know what or where. Just look from this particular point right here, where the cross arrow is, to that point. There was an exact symmetry between that side and that side. Yes, it touched it once, but it broke it right on the day, the hour, I should say, on the 120-minute hour, at 11:30 yesterday. It took it out. That's that level that was key support. So, and it only did it in trough B, whereas it went up. And if you just think of it from that level, it was B, C, D. It went three peaks. Then it came down in 2 troughs. Oh, wait a minute, no. Came down in 3. No, 2 troughs, yes. So, but what I did find, and that was really very important, is that I started to develop in great detail the left side, right side price time match, which is exactly what you're looking at here. And then I found that unless there's a crash scenario, and a crash scenario, if we're looking at a 10-minute chart, a crash scenario is a decline of 20% in that particular issue, which can happen in 10-minute charts very easily. That's a crash in that particular 10-minute time frame. It's not a crash in a monthly. It's not even an eye blink. In fact, it's not even in the daily. You might not even see it. So it's your time frame, it's your reference, and that's where I learned that you can, in fact, make time plays from the left side to the right side, up and down. Okay, let's get to the numbers. The Dow is down. It feels like it's only 10 points, but this is the 5th day. And there are a couple of things that I'm making a big point about. One is this is not yet bear market material. Now, let me just define that. In price, you've gone down 300 points in the Dow, maybe a little more than 300 points. Yeah, it's not a big deal. 300 points, what's that? That's 3%, something like that. No, it's even less. But that's really not the issue. The issue is what's happening to the different sectors. What happens because of this rotational basis? Why are we looking at some sectors? We have a particular stock that right now is up about 25% in just, I don't know if we've had it more than 5 days, maybe a week. What's with that? And it's in a sector that says the economy is actually starting to do very well. What's with that? You've got other sectors that are saying, we are just getting really tired. We've been the leaders for so long. And that's one of the reasons why in a bear phase, what you do is you get deep selling, and it goes overnight into the foreign markets, because the foreign markets these days have been holding up a little bit better. And that's why I'm calling it a rotation digestive phase right now. I'll get into that in a little bit more detail, but I'd like to just run the numbers by saying the S&P is down a little deeper than the Dow's, down $1.14. It's just a little 0.07 down. Dow's down 0.04. That's nothing. This is interesting. Gold is up $20 at $13.36. The silver is up 0.31 at $21.90. So the support that was really important to come in the GLD has come in. We'll probably look at that in a moment. Actually, let me just grab it now. I'm just liable to get carried away with other things. GLD. And what was important was that little turnaround yesterday is going where to? It's going to the 129 area, which is exactly on the 9-period exponential moving average. In the 120-minute pattern, this arch, which actually holds above the low, can turn out to be very positive. It could be like the inflection of the drop back at double top pattern, or the single leg A failure mode that suddenly finds support. So this is really important for gold right at this particular moment. Let me just take that away. If you're looking at silver, silver's also doing the same thing. Now, I had a question yesterday. I said I would not be buying the SLV at that particular point. I needed to see some evidence of other things. Maybe we're starting to get that evidence. We'll try to get to that a little later on. We've got bonds up 8 at 133.07. Now, that's really interesting, because why? In the Chapman methodology, we always look for Ds, and Ds are where you start to think, aha, this is the moment of truth, because at D, peak D, that's where you find out whether or not you're going to have a deeper pullback, a high-level consolidation, or one of those inflection points that I call an instant restart. So the TLT made a high yesterday of 106.84. So far, it's having a high-level consolidation down 17. What is the TLT? It is the Lehman 20-year T-bond fund. The left chart always is the daily chart with a Chapman wave notation. Weekly chart in the middle, monthly chart on the right. And this is going to be very interesting because I'm going to show you something here, and I'll spend much more time on it tonight at the meetup. Look at this. Look how important the 200-period moving average is way back over there. Look how far we've gone away from that 200-period moving average for the high that was made in the continuous contract with a high of July of 2012. Pulls back, leg C. What does leg C hold on to? It grabs this up channel and inside Chapman wave inside track support. And what do? We get a bounce off that. It was so important. Look how many times it's happened. 1, 2, 3, 4, 5, 6, 7. This is maybe the 8th time since 2007. It's hit this particular line and tried to rally. Month is not finished, but it's a great thing to look at and to say bonds are attempting a counter-trend rally, and that's really important. Why is it important? Because if it starts to break down, talking about that left side, right side price time match, how about this? The TLT, no, bonds, the continuous contract, I drawn this in ages ago, going all the way back to about 2011, September. And this is a weekly chart. And look what happened. The 130 and 230 seconds, that low, that became support. There's my midpoint. I chose a particular candle. It went right to that, and then it broke it. For the first time, it broke that support level. Where? The week of the 5th of July. I can give you prices of the continuous contract. It's a little bit different on the regular one. And that was at 131.5. And what happened? It went right to the 200-period exponential moving average. Bouncing off. Leg A, stochastic making a nice turnaround, not one of the great ones, but a nice turnaround. MACD just crossing positive. We'll see what happens by Friday afternoon. That, to me, is one of the tip-offs that says the upside in the market should be fairly limited. I'm still expecting that there's internal strength, and that's really what I'm talking about. Why I've not wanted to go whole hog to the short side. We do have short positions. They're working. That's good. We have long positions. They're working, that's good. But most importantly, what I'm looking at is, and this is very important, if bonds start to rally further, and if bonds in the December contract will go there, the December contract starts to break. Right now they're at 133 and 8/30 seconds, leg D. If the December contract can climb into the 135.5 to 136 area, that's going to be really important. We'll be right back with our callers waiting in line. We've got Dan in Basking Ridge, New Jersey, and we've got Jason in Spokane, Washington. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, Basil Chapman, and we are back. Dow is now up 24, S&P is up 2. Very interesting session, very interesting, and for a couple of reasons, because there is uncertainty. Now, I always like to say, people say, oh, the market hates this uncertainty. And I always say, no. Market loves uncertainty. It hates uncertainty about uncertainty. There's a big difference. And right now we've got uncertainty about uncertainty. In other words, it's a double problem. So we're going to have to look at individual stocks and individual sectors. And I think that's the best way to get through this. That's why I feel very strongly that I'm quite comfortable with longs and shorts, and we'll just deal with things as they come. Well, let's go to Dan. Hi, Dan. How are you?
Doing well. Thank you.
Good.
Basil, I wanted to just touch base about the, I've been watching nothing else but YRCW.
Okay.
And, talking about, the shippers, I know shippers have skyrocketed the past couple of weeks. However, YRCW, as far as over-the-road freight, they're down.
Yeah, that's completely different, right.
Yeah, 50%, And then I was also looking at the packaging companies to go along with the inland type of freight.
They've had huge moves, the packaging companies.
Yeah, so I just want to see what your thought was, not necessarily on those particular stocks, but maybe, packaging and the inland freight, those would be the first to go in any type of retail or any type of movement there.
Right. So I'm just looking at PKG, which is Packaging Corp of America. This is if you look at the chart, it's just gone straight up. It's in the in fact, it's one that we tried to get once. I just can't remember anything off the top of my head. But it was on my list of wanting to buy, but it never gave that kind of pullback that said now's the time, because this is one of those that if it's in a momentum move, you've just got to grab a small position right away and say, okay, that's my risk. At least I'm in it, because now I can wait for that pullback, but at least I'm in the game, even if it's a much smaller amount than I would like. So Packaging Company, PKG, is trading at 58.61, up 34 cents. It's just made a peak A, B, C, D, E, peak E in the daily. And that gap, that long wick, and that gap might have to be filled. And this is E with a gap up in the weekly, the daily. That was the daily, and now the weekly is in leg E, probably a peak E this week. And let me just see if there's a round number high, and it's E in the monthly. I have to tell you, the more I look at these charts, 61.32 is the high, no round numbers yet. So the more I look at these charts, the more I'm saying the leadership role is getting thinner. At the same time, the stocks that have been on an absolute tear are still finding money managers that are jumping into them. But the difficulty is at this particular possible inflection point in the market, is this the time to be grabbing these stocks? So let's just look at the one that's had the biggest decline, made a turnaround. That's YR, one that I also follow. Not as much as you do, but I do keep it in mind as a stock that had once a fantastic run. It went to, it was 5. Is that right? Oh, yeah, this is the one that went to 483,525. I'm not sure what goes on in this stock. It must have had a couple of quadruple splits or something. But that was the high back in March of 2005. So let's just call it, I can't even call it 48. But what did happen is now I have to squash the monthly chart because the aberration is so great. That monthly chart went down to $4.56 in April of 2012. It's gone to peak A, peak B, peak C. Now it's made a peak D all the way up at 36.99. This is huge moves. Went from 36.99 in 1 month. It plunged down to 14.39. Let's call it 2 months. So now the question is this going to be a dreaded H pattern in the weekly? Is it going to be set up because the daily is going to fail? Or is this just the perfect time to start nibbling at a small position to say, hey, wait a minute, if there's a belated move, this thing could really have a fabulous move because it's got that gap all the way up at 26, 25.54 was the high, and 28.39 with another round number, this loves round numbers, was 28. So it's got a big gap to fall around about the 26 area. So I'm going to do this. I'm going to do a little bit of work on it. I'm also going to grab the IYT, and I'm going to grab a couple of the shippers, and we'll compare and say, is this one to play catch-up, or do you want to go with some leadership right now? So I'll be right back. We're on with Dan in Basking Ridge, and I certainly hope that Jason will be able to hold on, and we'll be right back after these messages.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. During the break, for those of you who don't know what the Tiger Den is all about, I was typing in and showing some other questions and answering them based on the chart. It was actually GMCR, but we're going to go right back. So, Dan, this is what I'm looking at. There's a stock that I've spoken about before. It's not one that we have in terms of the shippers. We have a different one. This is NAT, N-A-T, which is Nordic American Tankers Limited. If you're looking to say, wait a minute, I like the shippers, but is it possible that YRCW, and I forgot to mention that YRCW is, of course I remember the symbol always, YRC Worldwide Inc. It used to be yellow something or other. And so I would prefer to go with the one that's already showing strength rather than to have the one that says, I've got to get out of this rut. I might have a move from 17 to 20, but at this particular pace, it could take a while. I might even drop below 16, and that'll be terrible because there could be a retest of the low side. You know what I'm saying? I'm saying that I would rather you buy strength and buy YRCW when there's a confirmation that it's not going to make that H pattern to come back to dip and retest, but go with one of the shippers that's not in the shipping of by land, but shipping by sea. So that's just my thing. But if you are looking at this one, YRC, and you're looking at something a little differently, maybe fundamentally, I don't know how you're looking at it, but if you are looking at it as a potential for a longer-term move to the upside, I would give it a point or so, just a kind of a little leeway in time. I would much prefer to buy it at about 1780 or 1790 above the 9-period moving average than below the moving average until I get some confirmation. Now, there's a chance of a silent doji here, which says that if there is a move and it takes it within the next 3 to 4 sessions without breaking 16, without breaking 1623, now I'd like to say 16, without breaking 16, if it's able, in fact, to suddenly pop and go up towards the 18 area, that's a good sign. That's almost like the GLD had a successful retest, in a way, a retest of the left side low bar. So what is your plan?
Concerned about getting in. Yeah, I'm still here. I'm sorry. I was looking at a 20% gap between 7 and 9 back on the beginning of May. So I was wondering if it would migrate back down to that gap before getting in.
Well, it doesn't have to go all that far, but definitely if it takes out the 16 support, you've got to think that 1439 is going to be retested. And if that gets broken, then all I can say is I don't want any part of this stock because there's that gap. There's a tiny little gap, 1160 is a penny gap back at $11.61. No, that would not be good. That's why I'm saying right here, if it finds strength and starts to move up, that actually turns out to be quite a positive sign. But I'm with you. I'd rather wait. I think rather wait. And if you're looking at that sector, I think one that was a laggard up until this morning is probably NAT. You could maybe just nibble on a small position there and wait for another pullback and then check it out to add to it. But that's one that I would actually, even at this particular point, I would probably do a little nibbling on NAT. I hope that helps you in looking at these.
It really does. If you have a chance at the end of the show, RKT is Rock 10. It's another paper stock. But that looks like it hit 126.05, and then it's just downhill.
This was in Investors Business Daily. I had it all notated, but it seems to have disappeared, the notation. I'm a little worried about this one because it's had such a huge gap to the upside with the doji high at 126.05. That's different to package PKG. So thank you so much for calling. Always love to hear from you. Let's go to Jason in Spokane, Washington. Hi, Jason. How are you?
Perfect. And yourself, Basil?
Very well, thank you.
So, BAA, I have 2 questions about it.
Yes.
I have a long position, and I just read somewhere that there might be dividends for the preferred stock, and I don't know if that's considered their preferred. And then what do you think overall on the holding it?
And this is trading at 0.66, right?
Correct.
Okay. So, folks, we're looking at Banro. I thought it was a bank. It's Banro Corporation. I'm not sure what they do, but they made a peak G at the top way back in the monthly chart in February of 2012, and the low was back in December of 2008 at 0.65. It screams up all the way to, this is a huge move, up to 6.05, and now it's come down to the most recent low, which is a few days ago, of 0.59. You know what I'm going to suggest? This is these stocks, I don't have to tell you. You know that they don't trade at 0.6 instead of $66 for nothing. There's something going on here. Now, I'm always a little afraid of dividends that are claimed for stocks that are so low priced. And I remember years ago, back in maybe it was the late 70s, early 80s, I got into this thing where I would look at the highest PE stock and I'd buy it. Every time there was a sharp, big pullback in the market, I'd grab one of those stocks and I'd buy a Merrill Lynch and I'd buy a computer company and I'd buy the 2 highest flying stocks. That's the highest PEs, and then I'd run with them. And then when I got a sell signal, I'd look for the lowest PE stock. And I found one, it was called Moni. Moni was up in Canada. I'll never forget this. I thought, great, and I'd followed it for years. And Moni had a trading range, a small trading range. Anyway, I bought it once at a low PE, Well, that PE went even lower, as well as the stock. So there's no real set method when stocks, and that was, in my mind says $8. I don't know, maybe I'm wrong, $6 or $8 for that stock. So I'm going to say to you, it's a big risk. I'm not going to tell you what to do because you've obviously looked at very low price stocks before and you've traded them probably successfully. So Jason, what I'm going to suggest is this. There's a pattern that I'm looking at here, which is exactly a replication of what I thought was a possibility in the GLD funny. How many times that's popped up? That's that single leg A that fails and goes to a lower low unless it holds tremendous support in an area on the left side that is like a containment area, and you can see that in the GLD, that whole area between 126.21 and 128 held. So that's a single leg A up that so far I like the action. It's a good sign. But when I get to BAA, it's the same pattern, but it failed. It went below, but then it closed above. So this is what I'm going to recommend. You've bought in, and you bought a little lower down, correct?
Correct.
Okay. So now there's only one way that you can really handle this. First of all, for people listening, Jason knows exactly what I'm talking about when I say this is not for the faint of heart. Number one, it's not for people who've never traded these. It's not a bulletin board stock, but it's like a stock that, let me just look at the volume. It has good volume, not huge volume for a 0.66 stock. They should be up at 1 to 2 million, and it's not trading there. I'm going to make the suggestion that you hold the stock, but don't. It's a big percentage move. Let's just say you got in, the low was 59. Let's just imagine you got in at 62. If it goes to 58, that is, what did I say, 62. If it goes to 58, you've just got 4.04. But that's a huge percentage move. So you and I know that we're not talking percentages here on the downside. What we're talking about is the percentage move on the upside. So here's my recommendation. Treat this as if it was an option, number one. Number two is, if it breaks above the candle, that gap down candle, the high was 0.70 on the 20th. Boy, if this thing can go to 0.70, raise your stop. It has to be mental, because if you put it in, they'll just clobber you with that. So take bar, and I would make sure that if it goes to about 0.70 or 0.71, 72, some part of your position has to have a trading stop. I don't even want to tell you what the trading stop is, because it might move so quickly. But in my mind, I'm thinking my trading stop will be a penny above my entry point. If it goes, and the beauty of this particular candle is that if it can get back into the body of the high part of the body of the candle of the 18th, and I'd have to put that into that 0.71, 72 area, there's a really good chance that it starts to improve the next time frame, which is the weekly chart. So all I'm going to say is that if it starts to make you money, don't take a loss, or at least don't take more than 0.3 cents as a loss, because if this thing breaks to a new low, there's no telling where it's going to go. I couldn't care about the dividend. I want to see that dividend. That dividend could be delayed. Anything can happen to it. I'd rather look at the stock as an option and say, great, the higher it moves, the more I'm going to move 1/3 of my position, half of my position, 2/3 of my position to stops. And don't be afraid to take money off, because this thing, I don't even have to tell you this moves down really quickly. So on the monthly chart, I can't say anything is horrible, but the weekly chart is suggesting that if BAA, which is, let me read that again, Banro Corporation, is able, without breaking to 0.58, 57, if it's able, in fact, to get to the 0.81 area in the next 2 weeks, that'll be the second time in this whole move down that's going on for about a year. It's the first time that it's got the energy to go higher. So I hope that helps you, because I'm not averse to trading this sort of thing, but you've got to treat it as very speculative. You don't put all your money in it, and whatever you have, you want to skim off and keep taking off and find others like it. Hope that helps you.
Yes, thank you very much.
Thank you. That's Jason in Spokane. We're looking at BAA trading at 0.66, and that it's not for everyone, definitely. Let's go to Brian in Jackson, Mississippi. Hi, Brian. How are you?
Hi, Basil. Thanks for taking my call. How are you?
My pleasure. I'm good.
I'm looking at. I've got some puts on Apple. I've got the October 450s and the November 425s, and I'm trying to. It's got I'm looking at a descending. I guess you call it top channel.
So in the daily chart, if I just draw this out, it's got that falling axe formation where it makes lower from a peak D, E, or F high. It makes lower highs and much lower lows. It says very clearly that if Apple is able to break above 498, hold, I shouldn't say break, it needs to hold above 498, very quickly could it test the left side high of 507.92. There was a round number 505 high. That 505 is something to keep in mind, and then it can go all the way to the top. Right now, the stochastic is only at 57%, and the MACD has a chance to deflect lower. That's what you want to see. So I'm going to try to do this as objectively as I can. I'm going to pretend I didn't hear you say that you have puts, and I wouldn't definitely pretend I didn't hear you say you have puts way out into October, although way out is not that far when you're looking at a move of 30 points that you need to see, 30 to 40 points. So here we go. Number one, the H pattern was a successful test, and that has produced a cup formation. And the cup formation says right there that two things must happen. One is the daily chart, that's the weekly chart. The pattern that I was looking at, the break of the descending trend line, very important for Apple, number one. Number two is, in this particular pattern, the MACD is good. Stochastics at 70% and will absolutely improve if there's a move towards the 505 level. So that's the upside. The monthly chart still says to me that on the longer term basis, Apple is going to fail at some point, and there's a really good chance to come back and test the very levels you're talking about. Now let's do a time frame sequence. The time says that if you're in the position already, and you're looking in October, where's my book quickly? October, third Friday of October is 4/11.
I've got November also. I've got one.
Yeah, you got
November.
So, but the higher one is October, and the lower one is November. Okay, that's fine. Right. So you've got 3 weeks, 4 weeks. You've got about 4.5 weeks. Good. You need that kind of time. Now, this is what I'm going to suggest to you. If there is any chance at all that Apple, at some point in the next, I'm going to put it in days, in the next, today's Tuesday, Wednesday, by Friday afternoon or Monday at noon, if Apple is trading close to the 491 level, that should be nothing for Apple, 9 points. 491 level, or actually has taken out 496.91, I'd be worried about those puts, because you might be absolutely correct, but you could see them shrink to just about nothing in the interim period. So let me give you another scenario, and we'll be right back. We've got Brian in Jackson, Mississippi, and we are looking at the Dow up 23 and the S&P up 3.26 and Apple down 6.17 at 482. I'll be right back after these messages.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a one-day online master trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades, resulting in 1 loss and a combined profit of 129%. Our next move? It's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the Ultimate Money Machine. All the details on the front page of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi folks, Basil Chapman. As I said before, I think there is still internal strength, enough internal strength to contain this particular move. Politics is one thing, and that politics says, hey, at any time the market could be just knocked for a loop because things are just... There's that uncertainty about uncertainty. But I still see buying, and that's the only reason why I haven't got full tilt into the downside, the short side. I still see some strength. So if I'm looking at Apple, I must tell you that the potential for a spike to the upside is there. But now this is what you want to see. So Brian, the best thing that could happen to you, I'm not sure it can happen, but if there's a gap down with an island reversal tomorrow under today's low, then all of a sudden the 9-period moving average of 478 is activated, and that becomes the resistance. More importantly, you absolutely want to see the stochastic turn down from here to about 53 to 48%, as well as the daily MACD. It's got to deflect lower. At this point, I still see enough strength in Apple to say, boy, there's actually an island reversal to the upside, funnily enough. So you want to see that negated. There's one over there. This is actually to both sides if it pulls back. So the downside to me is longer term. I'm looking at a potential for Apple, great company, but there's still a whole digestive phase going on, and I suspect that there will be lower prices to come. So I'm going to say, at this particular point, watch those levels I just discussed. But today's Wednesday. I would love if maybe Monday, we could look at this again. If Apple hasn't spiked over 505, and for your sake, I hope it doesn't, but if it's just stuck in this range, let's look at it again on Monday, and then I can start looking maybe even at the options and see exactly what we see in terms of the shrinkage of where it is in the premium or the increase in the premium by Monday. So those are the parameters you want to see Apple break 478 as soon as possible. If it breaks to the upside, like that 488, 492 area, it's going to be a little tough. But market conditions say that it could be pulling back. So I'm looking at it on a monthly basis as longer term. I see the parameters you're looking at, the 450s, 470s, 450s, 440s as possible. So I hope that helps you.
Appreciate it. Thank you.
Thanks for calling, Brian. So let's go to Nick in Oklahoma City. Hi, Nick. How are you doing?
I'm great. Well, looking at UNXL.
Yes. Are you long?
Yes, I am.
Okay. So UNXL is, in fact, Unipixel Inc. I haven't seen a couple of stocks I've never even heard of. A, B, C, D, E, F, made a peak F top, but a huge move to the upside. I love the action today after being coming down, and then suddenly gapping up. If this thing at $19.37, UNXL, is able to hold this gain into the close today above 18, I'd say about 1883, the weekly chart suddenly starts to really improve technically, A, B, C, and if it breaks above 20.39, that's the high of the week of the 6th of September, that's leg D. But it's not a bad thing. It's actually a very good thing because it's starting to improve the weekly chart a lot. And then all of a sudden, the monthly chart, which was looking very poor, is looking good. So those are the parameters. Now, I don't know what price you got in, but I'd be real nervous if this gave back the gains by Friday afternoon at 2 o'clock to 3 o'clock into Monday morning between 10 o'clock and 11. If this thing has gone back to the $17.52 area, I'd be really careful. But right now, I like the way it looks. So, congratulations. Hold tight. And I would put a little bit of a stop on this thing at about 1870 on a little part of your position, just in case it has a bit of a pullback. Hey, congratulations. Call me again, Nick. Thank you. Folks, Basil Chapman, stay tuned for Larry Pesavento. And the Dow's up 26. I'm looking at 15,200 as absolutely critical to hold. And I'd like to see 15,004.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.